Imagine stepping back in time to 1992, when Starbucks was just beginning its journey as a public company. Back then, the idea of a coffee shop chain becoming a global powerhouse seemed almost far-fetched. But if you had bought Starbucks stock for just a few bucks, you would have been making a decision that could change your financial future forever. In those early days, you could walk into a Starbucks, order a latte for less than the price of a single share, and not think twice about it. The company was still growing, and its stock was affordable to almost anyone willing to take a chance. Fast forward to today, and the story is completely different. That same investment, which once seemed so small, could now buy you hundreds, if not thousands, of lattes. Starbucks stock has multiplied in value, rewarding patient investors with incredible returns. This is the true power of long-term investing. Starbucks' journey on the stock market is not just about coffee, it's about vision, growth, and the ability to turn a simple idea into a global phenomenon. The company's rise is honestly a captivating story that has inspired countless investors. Since its IPO, Starbucks has become a Wall Street darling, consistently outperforming expectations and turning early believers into coffee-loving millionaires. The brand's success is a testament to the power of innovation and persistence in the business world. But, as we look to the future, the big question remains: can this iconic brand continue to deliver such impressive returns? With competition heating up and the market always changing, nothing is guaranteed. Could Starbucks stock actually reach the incredible milestone of $1,000 per share? It sounds ambitious, but with the right strategy and continued growth, it's a possibility that has investors buzzing with excitement. To answer that, we need to dive deep into the world of finance, analyze the company's performance, and look at the trends shaping the future of Starbucks. Let's break down the numbers and see what it would really take for Starbucks to reach that next level. This chart tells the story of Starbucks' incredible rise, showing just how much the stock has climbed over the years. It's a testament to the company's resilience, adaptability, and the loyalty of its customers around the world. Of course, it's important to remember that past performance doesn't guarantee future results. The stock market is full of surprises, and even the most successful companies face challenges along the way. So, what would it really take for Starbucks to hit that magical $1,000 mark? Let's explore the possibilities, the hurdles, and the opportunities that lie ahead for this legendary coffee giant. Reaching $1,000 per share is a huge milestone for any company. For Starbucks to achieve this, it would need to grow its business significantly. We're talking about expanding globally, innovating with new products, and maybe even going beyond coffee. Think about it: more stores in growing markets like China and India, exciting new drinks and food items, and maybe even partnerships with other big brands. These are just a few ways Starbucks could boost its revenue and potentially push its stock price higher. However, it's not all sunshine and rainbows. Starbucks faces challenges too, like rising competition, changing consumer tastes, and economic uncertainty. To reach $1,000, Starbucks needs to overcome these obstacles and keep its brand strong and relevant for years to come. There are plenty of reasons to be optimistic about Starbucks' future. First, they're the biggest coffee chain globally, with a brand recognized and loved worldwide. People trust Starbucks, and that brand loyalty is honestly priceless. Second, Starbucks is a cash-generating machine. They make a healthy profit on every cup of coffee they sell, and that cash flow allows them to invest in new stores, products, and technology. Third, Starbucks has a history of rewarding its shareholders through dividends and stock buybacks. This means investors can potentially earn money even if the stock price doesn't go up much. These factors make Starbucks an attractive investment for many people. But remember, no investment is without risk. While Starbucks has many strengths, it also faces challenges. One concern is the rising cost of coffee beans and other ingredients. If Starbucks can't raise prices without losing customers, its profits could shrink. Another challenge is competition. Coffee shops are everywhere these days, and Starbucks needs to keep innovating to stay ahead of the game. They also face competition from other beverage giants like Coca-Cola and PepsiCo. Finally, Starbucks has a lot of debt. While debt can be used to fuel growth, it can also become a burden if the economy takes a downturn. It's essential to weigh both the positives and negatives before investing in any stock, even a well-known company like Starbucks. So how does Starbucks stack up against its rivals? Let's compare it to McDonald's, another global giant, and Dutch Bros, which is a rapidly growing coffee chain. We'll look at their price-to-earnings ratios, dividends, and growth prospects. Starbucks generally trades at a higher price-to-earnings ratio than McDonald's, meaning investors are willing to pay more for every dollar of Starbucks earnings. This suggests the market is more optimistic about Starbucks' future growth. However, McDonald's has a longer history of paying dividends and currently offers a higher dividend yield than Starbucks. Dutch Brothers, being a younger company, doesn't pay dividends yet but is focused on, aggressive expansion. Each company has its strengths and weaknesses. Investors need to decide which one aligns best with their investment goals and risk tolerance. Let's take a trip down memory lane and see how much money investors would have made if they had bought Starbucks stock early on. Imagine investing $1,000 in Starbucks back in 1992. Today, that investment would be worth, well, a lot. Of course, past performance is not indicative of future results, but Starbucks' history of growth and shareholder returns is undoubtedly impressive. The company has consistently grown its earnings, paid dividends, and bought back its stock, rewarding long-term investors handsomely. While Starbucks' future returns might not be as spectacular as its past, the company's strong brand, loyal customer base, and global growth potential suggest it could continue to be a solid investment. Now, let's put on our futuristic goggles and take a bold leap forward in time to imagine what Starbucks might look like in the years to come. The world is changing rapidly, and Starbucks, as a global coffee giant, is sure to evolve in fascinating ways. Let's explore how this iconic brand could transform over the next few decades, adapting to new technologies, shifting consumer values, and even entirely new frontiers. By 2030, we could see Starbucks fully embracing artificial intelligence to personalize customer experiences like never before. Imagine walking into a store where your favorite drink is already being prepared as you arrive, thanks to predictive AI. Operations could be optimized with smart inventory systems, and digital baristas might greet you with tailored recommendations based on your mood, weather, or even your health goals. The entire ordering process could be seamless, with voice-activated menus and contactless payment systems making your visit faster and more enjoyable. Fast forward to 2040, and Starbucks could be leading the charge in sustainability, setting new industry standards. Picture every cup and lid being fully compostable, and every bean sourced from farms that prioritize both ethical practices and environmental stewardship. Stores might be powered entirely by renewable energy, with solar panels and green roofs becoming the norm. Starbucks could even partner with local communities to support reforestation and clean water initiatives, making your daily coffee part of a global movement for good. Imagine Starbucks becoming synonymous with eco-consciousness, where every visit feels like a small step toward a healthier planet. Recycling stations, zero-waste initiatives, and educational displays could inspire customers to make more sustainable choices in their own lives. By 2050, who knows? Maybe Starbucks will have expanded far beyond coffee, offering a diverse range of beverages and food items inspired by cultures from around the world. We might even see Starbucks locations in unexpected places. Think airports on Mars or coffee shops aboard space hotels, serving interstellar travelers their favorite brews. The possibilities are as limitless as our imagination. Okay, maybe that last one is a bit far-fetched, but with Starbucks, you never know. The company has always been about pushing boundaries and reimagining what a coffee shop can be. The future is full of possibilities, and Starbucks seems well-positioned to adapt and thrive in the decades to come. Whether it's through technology, sustainability, or bold new ventures, Starbucks will likely continue to shape the way we experience coffee, and maybe even the world around us. Before we render our final verdict, let's give Starbucks a quick financial health checkup. We'll examine its profit margin, debt levels, dividend safety, and overall risk profile. Starbucks boasts a healthy profit margin, indicating it's efficient at turning sales into profits. However, as mentioned earlier, its debt levels are relatively high, which could pose a risk if the economy weakens. Despite the debt, Starbucks' dividend appears safe for now, thanks to its strong cash flow generation. However, investors should keep an eye on the company's debt management and dividend payout ratio in the future. Overall, Starbucks appears to be in decent financial shape, but there's always room for improvement. So can Starbucks stock really reach $1,000 per share? It's a question that sparks curiosity among investors and coffee lovers alike. With Starbucks being such a recognizable brand, it's natural to wonder if its stock could ever soar to such heights. While it's not impossible, it's highly unlikely in the near future. The company would need to deliver extraordinary growth, far beyond what we've seen historically, to justify that kind of price. Even with strong performance, reaching $1,000 would require a combination of massive revenue increases, significant profit margin expansion, and a market environment that values Starbucks at a much higher multiple than today. Starbucks would need to achieve and sustain an incredibly high growth rate for many years to reach that price target. We're talking about consistent double-digit growth in both sales and earnings, year after year, which is a tall order for a company of its size and maturity. Most established companies simply can't maintain that kind of momentum indefinitely, especially in a competitive and ever-changing global market. However, that doesn't mean Starbucks isn't a good investment. In fact, it's quite the opposite for many investors. Starbucks has built a loyal customer base, a powerful brand, and a global presence that few companies can match. Its ability to adapt to changing consumer tastes and expand into new markets has helped it remain relevant and profitable over the years. It's a solid company with a strong brand, global reach, and a history of rewarding shareholders. Starbucks has consistently paid and grown its dividend, making it attractive for income-focused investors. Its business model, centered around premium coffee and customer experience, has proven resilient even during economic downturns. If you're looking for a stable dividend growth stock, Starbucks could be a decent addition to your portfolio. It's not likely to deliver overnight riches, but it can offer steady returns and a sense of security for long-term investors. Plus, owning a piece of a company you see and interact with every day can be rewarding in its own right. But if you're seeking explosive, life-changing returns, you might want to look elsewhere. High-growth opportunities are often found in smaller, more volatile companies or emerging industries, where the risks and potential rewards are much greater. Starbucks, as a mature business, is more likely to deliver steady, reliable growth rather than dramatic price jumps. The stock market is full of opportunities, and there might be other companies out there with even greater growth potential than Starbucks. It's important to diversify your investments and consider a mix of established blue-chip stocks and up-and-coming innovators to balance risk and reward. Remember, investing is a marathon, not a sprint. Building wealth takes time, patience, and discipline. Chasing the next big thing can be tempting, but slow and steady often wins the race, especially when it comes to your financial future. So, do your research, invest for the long term, and never put all your eggs in one basket, even if that basket is filled with delicious Starbucks coffee. Ultimately, the best investment strategy is one that fits your goals, risk tolerance, and time horizon.